Are you ready to turn a market crash into your biggest financial opportunity? Imagine making millions while others are panicking. Sounds impossible. It's not. In today's video, we'll reveal how to navigate the upcoming economic downturn and emerge wealthier than ever. We'll explore strategies used by savvy investors to profit during turbulent times and explain why this time the rules have changed. If you're prepared to challenge conventional wisdom and take control of your financial future, you're in the right place. Let's dive in and uncover how you can capitalize on the next market crash. This time it's different. Many people believe the current economic climate is unique, and they might be right. We are emerging from the longest bull run in history, lasting 11 years from 2011. During this period, savvy investors made significant fortunes, particularly during the mortgage-backed securities (MBS) and collateralized debt obligation (CDO) crashes. By investing heavily in prime real estate across the Southwest, they capitalized on the downturn. This prolonged bull market has led many, especially younger investors, to believe that this time it's different. But the fundamentals haven't changed. The Federal Reserve cannot print oil, gas, or food, yet people still follow its directives blindly. The so-called experts like Janet Yellen, Joe Biden, and Jerome Powell are often mistaken. The reality is, when interest rates rise to combat inflation, as seen during Paul Volcker's tenure, the impact is severe. Today, our debt-to-GDP ratio is over 125%, compared to 30% back then, making a soft landing unlikely. Making money in a downturn. Despite these challenges, investors who think differently about their strategies can make more money in a few years than they might in a lifetime following traditional advice. Instead of relying on the conventional wisdom to buy stocks, bonds, and mutual funds, they focus on tangible assets like real estate. For example, some own thousands of apartment units. As the Fed dropped interest rates, the value of these properties increased. By refinancing at lower rates, they maintain strong cash flow and significant equity. During economic downturns, understanding the credit market is crucial. The repo market, where banks lend to each other, can indicate underlying instability. In 2011, the repo market's issues were a precursor to broader financial problems. By paying attention to these signals, astute investors positioned themselves to profit when the market corrected. The power of debt. One key strategy is leveraging debt. Contrary to popular belief, debt can be a powerful tool if used correctly. By refinancing properties, investors can access tax-free money, which they reinvest into more properties. This strategy, combined with tax benefits like depreciation and amortization, allows them to minimize taxes and maximize cash flow. Investors also look into commodities like oil. When President Biden halted the Keystone XL pipeline, oil prices soared, benefiting those who had invested directly in oil production. Understanding global economic policies and their impacts on commodity prices can provide significant opportunities. The importance of non-paper assets. Avoiding traditional paper assets like stocks and bonds is another critical approach. Instead, focus on real assets that provide tangible value. Real estate, commodities, and businesses that produce essential goods are primary investments. These assets are less susceptible to market volatility and inflation. For instance, during inflationary periods, the value of real estate tends to rise while fixed-rate debt becomes cheaper in real terms. By owning physical assets, investors protect their wealth from the devaluation caused by inflation. Lessons from history. Looking back at past market crashes, it's clear that significant opportunities arise during these times. The 2008 financial crisis, for example, was a period when many savvy investors made their fortunes. By buying undervalued assets, they capitalized on the market's recovery. Today's economic environment presents similar opportunities. The current bubble is larger and more encompassing than the 2008 crisis, affecting not just real estate, but also stocks, bonds, and credit. Understanding these dynamics can help position investors to profit when the bubble bursts. Now, let's take a look at some actionable steps for today. Diversify beyond stocks and bonds. Diversification is crucial for mitigating risk and ensuring stable returns, especially during a market crash. While traditional portfolios rely heavily on stocks and bonds, Consider branching out into real estate, commodities, and other tangible assets. Real estate provides consistent cash flow and appreciates over time. Commodities like gold and oil can hedge against inflation and economic downturns. Additionally, investing in private businesses or infrastructure can yield substantial returns. By diversifying beyond stocks and bonds, you create a more resilient portfolio capable of weathering financial storms and capitalizing on opportunities in various economic conditions. Leverage debt wisely. Leveraging debt can amplify your investment returns if managed strategically. Instead of viewing debt as a burden, see it as a tool to access additional capital for lucrative opportunities. Low interest rates present an ideal environment for refinancing properties or financing new acquisitions. By borrowing to invest in income-generating assets, you can enhance cash flow and build equity. Additionally, using debt allows you to take advantage of tax benefits such as interest deductions. However, it's crucial to maintain a disciplined approach, ensuring that your debt levels are manageable and investments are sound to avoid over-leveraging. Stay informed on economic policies. Staying informed on economic policies is essential for making strategic investment decisions. Government actions, such as changes in interest rates, tax laws, and regulations, can significantly impact various asset classes. For instance, policies affecting real estate, energy, or trade can create opportunities or challenges for investors. Regularly, follow updates from central banks, financial news outlets, and economic reports to understand the broader economic landscape. By keeping abreast of these changes, you can anticipate market movements, adjust your strategies accordingly, and position yourself to take advantage of new opportunities while mitigating potential risks. Invest in essential goods and services. Investing in essential goods and services is a smart strategy during economic downturns. These sectors include healthcare, utilities, food production, and energy, which remain in demand regardless of economic conditions. Businesses in these areas typically experience stable revenue streams and are less affected by market volatility. By focusing on essential industries, you create a more resilient investment portfolio that can weather financial crises and provide steady returns. Moreover, essential goods and services often benefit from government support and subsidies, adding an extra layer of security to your investments. Educate yourself continuously. Continuous education is vital for successful investing. The financial landscape is ever-changing, with new opportunities and risks emerging regularly. By staying informed and expanding your knowledge, you can make better investment decisions, attend seminars, read financial literature, follow market analysts, and take courses on investment strategies. Networking with other investors and joining investment clubs can also provide valuable insights and perspectives. The more you learn, the better equipped you are to recognize trends, avoid pitfalls, and capitalize on profitable opportunities. Lifelong learning ensures that you remain adaptable and well-prepared to navigate any economic environment. The upcoming market crash is not something to fear, but an opportunity to seize. By thinking differently and focusing on tangible assets, leveraging debt, and staying informed, you can turn this economic downturn into a chance to build significant wealth. Remember, while conventional wisdom has its place, the biggest profits come from challenging the status quo and making strategic, informed decisions. Now is the time to prepare and act. By adopting these strategies, you'll be well positioned to not only survive, but thrive in the upcoming market crash. Don't forget to like and subscribe to our channel for more amazing content. Thanks for watching, and we will see you in our next video.